Okay, we've got Kamlesh Gandhi also joining us on the show from MAS Financial. Remember, this stock has actually gone up more than 50% in the last 3 months. We'll talk to him about business outlook, growth strategy, and lots more. Mr. Gandhi, good morning, and thanks so much for being with us. Let's just start off with, getting a sense of the performance and really what's contributed to it, despite the fact that we've seen such a tough operating environment. You've actually seen almost 99 quarters with stable AUM growth. What's contributed, according to you?
Good morning, and yes, we are in our 25th year of operation, and this quarter will be our 100th quarter. So what differentiates us is our consistent growth and our philosophy for the same. So what we have done over these years is to grow in a calibrated manner, focus on extending credit where it is due, and help create successful entrepreneurs rather than just creating borrowers, especially in the segment where we are working, that is the MSME segment. So we have created our niche expertise serving that segment. And that segment being so huge has given us the opportunity to grow at a steady pace between 20 to 30%.
Understand, there have been green shoots visible in the rural economy with some signs of a pickup as well. Being a rural player, what are your observations on the ground? Because, you'll be able to give us an exact count.
So I must say that they're slowly improving, but at the same time, the stress is not completely gone because they are yet to cope up with the various things that happened in last 2 to 3 years, right from demonetization to implementation of GST and then the liquidity squeeze and all. But having said that, the things are improving. And as far as we are concerned, be it good times or challenging times, we are always concentrated on the fundamental of extending credit where it is due and grow at a calibrated pace, which has always helped us to maintain the quality of the growth as well as a very steady growth.
Apart from two-wheeler segments, what are the other segments that you are present in and have shown growth? And what is your outlook now on two-wheeler financing? Because, all of a sudden now we've seen the coronavirus outbreak. Many two-wheeler majors are coming out and actually downgrading their output growth for the next 1 month or so.
So if you see our AUM breakup, close to around 85 to 90% is from the MSME segment, and the rest is from two-wheeler and commercial vehicle. So as you rightly remarked, two-wheelers is under in the degrowth phase. We also degrew by 10% this quarter. So every time we hope that next 2 quarters will be good, and let us hope for the same for next quarters too, with introduction of the new emission norms and the new efforts being taken by the government. So let us hope that it picks up now. But currently, two-wheeler market has shown a degrowth, and so has our AUM also shown the same amount of degrowth, that is being degrew by 10%. And as I told you, majority of our AUM comes from the MSME segment.
Okay. Let's understand what is happening to the cost of capital. Given that NBFCs currently are not getting cash from mutual funds, there was a liquidity crisis. Now, Reserve Bank of India is maintaining that enough and more liquidity is back in the system. So what is your understanding? I mean, where do you think currently the cost of borrowing for a firm like yours or company like yours will settle?
So if you see, our cost of borrowing last quarter was close to 9.15, which came down from 9.5 the previous quarter. And as far as the NBFC sector is concerned, the banks are lending to the ones whom they are confident on. So we have a very strong track record of 25 years dealing with various banks, and we have demonstrated our capabilities of a very efficient last mile delivery of credit. So looking at that, we have never faced problems in raising funds, but the cost of fund increased during the last year, and which we think that it will come down gradually. So the banks are funding NBFCs, but very selectively, and I think very rightly so.
Can you broadly tell me, in this kind of an environment, when there is a drop in real estate demand, what happens to the non-affordable part of the market? I mean, the affordable part of the market, which is the housing affordable part, will always do well because that's India for you. But what happens to the luxury? What happens to the non-luxury elements, which essentially investors historically have invested in?
So as far as we are concerned, our full focus and concentration is on the affordable part of the market. We are not present in the luxury part. But as you say, there is a lot of slump in that demand also. But as far as we are concerned, we are not affected being our focus, as our focus is mainly on the affordable part.
Can you also give me a broad breakup of how much of your current loan is to the so-called salaried class and the non-salaried class? That's a question which I'm asking every NBFC these days, just to get a sense of the risk profile.
See, our majority of, as I told you, that over last 25 years, we have developed a niche expertise serving the MSME segment, that is micro, small, and medium entrepreneurs. So, salary class of loans forms a very negligible part of our total AUM, because our sole focus is to fund the small and the medium entrepreneurs, and that we've been doing since last more than 2 decades. And that is where we are focusing and would like to focus going forward.
The stress of business model change is there in the MSE and the SME sector. I mean, the big companies are getting bigger, the small companies are getting completely weeded out. That could be because of size, that could be because of disruption, or that purely could be because of poor capital allocation. Don't you run a risk of exposing yourself to MSE and SME sector where the general state of this space is not that great? I mean, what was a good SME business 3-4 years ago has now become a bad SME business because the demand of that technology or the demand of that product or the relevance of that company is dying now.
So if I share with you as a practitioner, the number of small businesses and the type of businesses we ourselves serve is more than 600 different types of businesses. So with change of technology or change in scale, it is not going to happen that the small businesses become irrelevant. On the contrary, they are also changing and adapting to the new things happening in the market. So we don't see, looking at the market size, that this segment can pose any problems as far as the growth is concerned, and they'll become irrelevant. Be it because of the scale or be it because of the technology, because they are also keen to change and they are also keen to adopt. And secondly, they play a very important role in the various value chains, right from the manufacturing to the ultimate the goods reaching to the consumers. So they are a very important part of the value chain, and the market size which they have and the market size which they command is phenomenal.
Thanks for joining us this morning and talking us through some of the factors at play there, Mr. Gandhi. Good to have you with us.